Inditex posted a rare miss on quarterly sales and profit on Wednesday. Third quarter sales at the Zara owner hit $9.84 billion, but that was below analyst projections. An 8.5% 9-month rise in net profit to $4.6 billion also failed to meet expectations. Inditex said severe floods in Spain at the end of October had a very limited impact on the company's performance. It also blamed a strong dollar and weak euro, as Inditex makes most of its sales in the euro. Shares have risen close to a third this year, but dropped back 6% in early trading Wednesday. However, it wasn't all underwhelming news for Inditex. The retailer said the holiday shopping season had got off to a good start. It said revenues were up 9% in the 6 weeks to December 9th, although that was slower than a year ago. The company further said it believed it was on a growth trajectory. Zara has been investing in larger stores, logistics centres and marketing. That as it tries to stay ahead of fast fashion rivals like H&M and Shein, which sell at lower prices.
The Nasdaq closed at a record high above 20,000 on Wednesday, a major milestone reached with the help of rallying tech stocks that also boosted the S&P 500. The Dow, however, didn't fare as well, dipping about 0.2%. The S&P 500 rose about 0.8, and the Nasdaq jumped nearly 1.8%. A Labor Department report Wednesday showed U.S. consumer prices in November increased by the most in 7 months, though broadly in line with market expectations. That increased expectations of a 0.25 percentage point interest rate cut at the Federal Reserve's policy meeting next week. Ben McMillan, Chief Investment Officer of IDX Advisors, says recent data points to the market powering even higher.
What's been the big thing in the last couple of weeks has been, investors looking at the data and the so-called soft landing or no landing for that matter. So there was concerns all year about a recession that, didn't materialize. And the numbers that have come out are still kind of in the Goldilocks zone, and so it's risk on for assets.
Wednesday's stock moves included Tesla, which climbed nearly 6% to a record high as the electric vehicle maker extended a rally in the wake of Donald Trump's election victory. Nvidia and other mega-cap growth stocks, including Alphabet and Amazon, also finished higher. Original meme stock GameStop gained 7.5% after the video game retailer reported a profit for the third quarter on cost-saving efforts. Shares of Broadcom jumped more than 6.5%, following a report that Apple is working with the company to develop its first server chip specially designed for artificial intelligence. And shares of Photoshop maker Adobe, up 0.5% at the close, slid nearly 9% in extended trading after the company forecast fiscal 2025 revenue below Wall Street estimates, suggesting its investments in AI were taking longer than expected to reap rewards.
State oil firm Rosneft has agreed to supply nearly 500,000 barrels of crude oil per day to Indian private refiner Reliance. That's according to 3 sources familiar with the matter. It's reportedly the biggest ever energy deal between the two countries. The 10-year agreement would be worth roughly $13 billion a year at today's prices. It would also further cement energy relations between India and Russia. That would be a boost for Russia, which is under heavy Western sanctions over its invasion of Ukraine. Rosneft did not reply to requests for comment. Reliance said it works with international suppliers, including from Russia, and deals are based on market conditions. The company declined further comment on commercial matters. The deal comes ahead of the planned visit by Russian President Vladimir Putin to India. India has become the largest importer of Russian crude after the European Union, which was previously the top buyer, imposed sanctions on Moscow. India has no sanctions on Russian oil, so refiners there have cashed in on the cheap crude supply. Competition among oil producers for a share of the Indian market is hot because it's one of the fastest growing energy markets. It's becoming more important as a driver of global demand as growth in top importer China slows.
Korean Air said Thursday it has completed its long-drawn-out acquisition of local rival Asiana. That creates one of Asia's biggest airlines. The $1.3 billion deal was first announced 4 years ago, making it the longest time ever to complete a tie-up between two carriers. Progress was hampered by competition concerns. Korean had to make significant concessions to mollify watchdogs around the world. That included handing routes to other airlines and selling off Asiana's cargo business. Now the enlarged group looks set to account for just over half of South Korea's passenger capacity, and it will rank 12th among world airlines, measured by international capacity. That's all according to a Reuters analysis of available data. Korean says the takeover will not mean layoffs. It says Asiana will be run as a subsidiary for 2 years before the companies are fully integrated. The new entity will then retain the Korean Air name, but under new branding. A single low-cost carrier will also be created as part of the reorganization.
The Nasdaq topped 20,000 for the first time during Wednesday's trading session, gaining nearly 2% from its Tuesday close. Credit technology stocks for the push to the record level as they continue to rally on hopes of looser regulation under Donald Trump's presidency and bets on AI-fueled earnings growth in the coming quarters. The index has skyrocketed more than 33% this year, outpacing the Dow Jones Industrial Average and the S&P 500. Tech mega caps Nvidia, Microsoft, and Apple, which are worth more than $3 trillion each, have been major contributors to helping the Nasdaq reach the milestone. The index hit 19,000 points for the first time in early November, when Donald Trump secured victory in the U.S. presidential election and his Republican Party swept both houses of Congress.
Rosemary and Larry Brester don't immediately look like players in the big business of making jet planes. But their family-run firm in the Seattle area has been supplying Boeing with metal parts for decades. And it's small companies like this that could be hardest hit by the troubles at the aerospace giant.
And then all of a sudden, it was the MAX issue that was going on with the Boeing company, and then with the door plug issue, it just kind of escalated everything, and everything was put on hold. And we saw a drastic shift in how our business, the income coming into the business, and the type of work that we were getting in the jobs, totally shifted. And so it became a struggle, and then the strike hit, and then it just made it worse. It's the worst I've ever seen it.
The pair began making parts for Boeing in 1973. It was a literal mom and pop business, with Rosemary taking care of their young kids in between work and Larry cranking out parts in the garage. Over the years they've expanded and come to love the industry.
We actually had drinks with Buzz Aldrin at one of the aerospace events in the UK. And so I think that was a highlight, and we still stay connected today.
But they remain a small cog in the vast Boeing supply chain, and that leaves them exposed to the firm's problems. Because the jet maker has been lurching from one crisis to another, including a mid-air blowout that led regulators to cap output over safety concerns, and then a major strike that saw production of its best-selling 737 MAX jets brought to a complete halt. This week, Boeing said output was starting again, but experts say it could take months to ramp up, leaving a legion of suppliers worldwide short of business. Back in the machine shop, the usual buzz of workers on day and swing shifts has gone quiet, with just Larry left to turn out a few parts.
In my end of it, I love seeing the different components that come in, because a lot of times we have new things from engineers that it looks like a neat challenge to manufacture.
Nearing the end of their careers, this pair can afford to be sanguine. But they've put hiring plans on hold for now, spelling missed opportunity for hopeful workers and the local economy. Even so, Rosemary and Larry bet Boeing will recover, given time.
We would be bored to death.
And they're not listening to any suggestion that it's time to
Grocery
call it a
chains
day.
Albertsons and Kroger have terminated their merger plans after a court blocked the deal, and that seems to have left some bad blood between the pair. On Wednesday, Albertsons said it was suing Kroger for billions of dollars in damages. It also wants a $600 million termination fee. Albertsons says its would-be partner failed to take any and all actions to get the deal approved. It says the firm should have shown more willingness to sell off assets to mollify regulators. Kroger called the claims baseless and said it would defend itself in court. In a statement, it said it was Albertsons that was guilty of multiple breaches of the merger agreement. Two different courts blocked the deal on Tuesday, siding with federal and state watchdogs who said it would be bad for competition. A combined firm would have been the second biggest grocery chain in the U.S., with a market share of about 11%. One analyst said the deal's collapse is actually a loss for the consumer, as it leaves no firm able to challenge the mighty Walmart. It's the top player in the market with a 17% share. But the deal had become a symbol for the rising cost of living in the U.S. and faced fierce opposition from regulators who claimed it could drive shopping bills yet higher. Food prices in the country are up 25% over the past 4 years and were a major issue in the presidential election.